Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, good afternoon. Welcome to Halftime Report. I'm Sumera Abdi and with me is my colleague Nigel D'Souza. Hi Nigel, good afternoon, and it really is turning out to be a good afternoon. So we've seen a smart recovery actually from the lows. So up about 0.25% on the frontline indices, and look at the mid-cap index. In fact, you should see the intraday chart. It's a near 2% recovery from the day's low. So that too now matching step with the frontliners, but the recovery itself there has been quite phenomenal. So I think market in good stead, and all eyes now on cricket.
That's right, Sumera. In the next 90 minutes, the Indians will go out there. We've already lost close to around 3 wickets, but I'm an optimist on the Indian team, and I've always been. I don't know about the markets, but
good to see your varied interests.
Absolutely. All right. Then if you just pull up, but just take that point forward, what Sumera was talking about with the mid-cap index, I think the advanced decline ratio should come up for you. Remember, we hit a fresh high on the mid-cap index on Monday itself, and from there we corrected close to around 900 points. But with the recovery that we're seeing, from the day's low, the mid-cap index, it's recovered more than 150 points from the lows. So that's good news. At least it's, stabilizing things a tad bit. Otherwise, 900 points you lose on the mid-cap index in a span of 3 sessions, you'll be a little worried. But good to see from those lows, a smart recovery there. We'll talk more about that. First up, running you through all the top stories at this span of time. The market makes a U-turn from the morning lows after the government assures of lower borrowings. The key indices, they gain close to around 0.25% each, while the mid-caps make a sharp intraday recovery to add 0.25%.
Bond yields ease while financial stocks make an intraday comeback after the government's borrowing is brought down to 20,000 crores, the additional borrowing from 50,000 crores. Nifty bank gains over 0.25%.
And the IT sector continues to lead for the second day in a row. It's boosted by TCS bagging a near $700 million deal to help M&G Prudential to transform digitally.
Well, the big earnings to watch today. HUL is expected to report a good quarter, while no surprises expected from Bharti Infratel. On the other hand, a CNBC TV18 poll sees a 50% rise in profit after tax for Zee Entertainment.
And we're getting weak global cues all round as the Asian markets decline following poke cues coming in from Wall Street. Cryptocurrencies recover marginally after a broad sell-off across the board, while crude slips as analysts warn of a correction coming up. Base metals as well, they are a tad bit weak on profit booking.
All right, those are all the top stories. It's time now for movers and shakers. Let's tell you all that is buzzing in trade, and top of mind is, of course, the IT pack today. So, Anisha, first up, over to you on TCS.
Well, yes, Sumera, the entire IT space is buzzing in trade, and TCS specifically on back of that big deal that they signed with M&G Prudential. Now, this is a $690 million deal, which is spread over a period of 10 years, and this would help M&G to transform themselves digitally. Remember, we have heard about a big deal happening in Infosys on the digital front. As far as TCS was concerned, the street was a bit, anxious whether they will be able to transform themselves digitally or not. But this deal signing really gives hope and, answers all that investor questions in terms of whether the company will be able to meet the digital targets or not. Other than that, remember yesterday as well, we read reports coming in from Morgan Stanley where they had changed the sector outlook. Yesterday, then later in the day, we got a report from Gartner suggesting that the IT spend is going to turn around in 2018. The signals of that have been given by the management of TCS and Infosys after their earnings as well. In terms of the Gartner report, they suggest 4.5% increase when it comes to 2018 spending on IT versus sub 4% that we saw in 2017. Clearly, the IT stocks are excited ahead of that, and TCS, as I mentioned, about that big mega deal coming in after the likes of Nielsen, etc., that we have seen recently. So clearly, the deal momentum picking up on the IT street.
Okay, all right. Thanks so much for that, Anisha. Well, let's hop across to Sonal. She's tracking United Spirits. Well, Sonal, just a month or so ago, United Spirits was heading towards a 4,000 mark. It's corrected 10% from there. Morgan Stanley is turning a tad bit cautious.
Yeah, exactly. Valuations is something that is really concerning them. In fact, today in a report, they have given it an equal weight rating, and they say that valuations is one thing that is really a big worry of caution for them. They also say that they do not see any earnings growth to grow beyond what they are estimating. In fact, the stock currently trades at 44 times forward earnings, and they say that they will be more positive on the stock only if they see evidence of the following, like acceleration in the overall volumes, the decrease in the debt because of the sale of their non-core assets, and also visibility of the pricing growth. So if all of that does not happen, according to them, the stock is trading at higher valuations. This might be one of the reasons why the stock is trading lower today.
All right, Sonal, thanks very much for that. There's also a brokerage report on GAIL. Naveen, what does CLSA say?
So, Sumera, in fact, this is a sell rating by CLSA. They maintain their sell rating on GAIL with a target price of 405. This is basically an event-based rating that has happened on GAIL. So, if you remember yesterday, GAIL signed a contract, a 20-year contract to get LNG from Gazprom of Russia. So, what CLSA believes is this is a tad bit of a negative surprise. Why is it a negative surprise given the fact that they are going to procure it for the next 20 years? Because of the supply glut that CLSA is anticipating in the gas space for the next 5 to 6 years. Also, what they believe is that in terms of the valuation, GAIL is trading tad above the historical valuation, almost 1 percentage point above the standard deviation of the historical valuation. So that is one key negative. The other one being the ROEs of GAIL currently are lower than the cost of equity. So that also is a tad bit of a worrisome factor for CLSA, and this is the reason why they retain a sell on the stock, and the target price is also below, almost 20% below the current market price. Back to you.
Okay, Naveen, let's hop across though to Ronit. He's going to give us a complete wrap-up of all the stocks that are in the news. Ronit.
Thanks, Nigel. So 3 stocks on my radar. First, I'll start with Agrotech Foods. The stock is quoting more than 50 times price to earnings, and came out with a decent set of numbers. Revenue was up 3%, as well as margins, good expansion, and the PAT was up 16%. But the stock's trading expensive valuation. One of the reasons the stock is down today. Moving to Hudson Agro, another weak quarter for them. Operating margins came in lower by around 150 basis points, as well as the PAT was down by more than 50%. Finally, moving to Jai Bharat Maruti, big outperformer in the last 1 year, and the revenues were decent. The operating profit margins were up by around 80 basis points, as well as the PAT was up by 10%.
All right, but the big story today, of course, comes in from the bond markets, where the DEA secretary has spoken about lower additional borrowing. Lata, can you take us through what this means and what might be the impact on financials?
Well, we saw this big bond sell-off yesterday. That was because the Reserve Bank had said that they will not allow banks more time to provide for the losses. And those losses were caused because of the December 28 announcement that the government is going to borrow more. Today, the government reversed that and said instead of 50,000 crore, they will borrow only 20,000 crore extra. So not many bond auctions left. And the reaction in the bond market was superb. It was about a 20 basis point fall in yields, or about a 1 rupee 50 paise rise in bond prices, more than erasing the losses. So PSU banks and NBFCs got sold off because everybody was expecting higher interest rates and bond losses. All those short trades today get reversed, and that explains the sharp reversal in both PSU banks and in NBFCs. But we should not lose sight of the longer-term pain that banks anyway have. In the third quarter, it is still losses. In the third quarter, yields had risen by about 80 basis points, the last 20 coming in just 1 day when the extra borrowing program was announced. That will mean bond losses, which have to be marked to market. And that's about a 15,000 crore of provisioning that some people are saying. I mean, this is a calculation depending on how much short-term bonds and long-term bonds banks own. But it could, in some cases, take away 1,000 crores of profit purely on provisioning for bond losses. I mean, there is still provisioning left for NPA. So the longer-term pain on corporate-facing banks and public sector banks which own bonds should not be forgotten. For the moment, the shorting that happened yesterday because of the bond market price crash has been reversed. So it's a near-term positive for them.
Okay, all right. Lada, thanks so much for explaining all of that to us. That explains why, in fact, the Nifty Bank and the PSU banking index as well have recovered considerably from the low point of the day. But moving on then, MCX, they posted a rather weak set of numbers in the third quarter. It was hampered by some one-offs, other income as well disappointed the street. The profitability on the whole dipped by closer to around 45%, while margins took a sharp knock. We here at CNBC TV18 spoke to the management earlier today. Let's hear out what they had to tell us.
The overall turnover down at 9%, very comparable to the trends that we have seen always when you compare the Q3 to the Q2. Q3 has always been slightly subdued, irrespective of the year, if we go back to the last 3-4 years. Within that, very happy that metals have actually bucked the trend and shown a healthy growth, and in a way compensating for the decline coming predominantly from the bullion sector, which went down 29% on a quarter-on-quarter basis. The commitment that we had made to all our investors, to our board, on managing our costs and ensuring that our cost base remains absolutely flat when it comes to the non-revenue linked cost, is something that we are continuing to deliver on, and we feel very confident of delivering for just not this year, but in going forward as well. There are a couple of very exciting things for this quarter. First, the 10 days itself has given us a good boost. The first 10 days volumes have been in excess of about 22,000 crores, up nearly 10-12% over the last quarter's numbers. The second thing is, in consultation with our participants, as well as our board and the product committees, we have finalized the next 4 or 5 contracts that we will want to get into for the options launch. This is something which we will now approach SEBI immediately and ask for approvals. We are looking at crude, zinc, copper and silver, where we will launch our next contracts and options.
And Den Networks has posted yet another quarter of profits with a strong performance on a year-on-year basis. So we caught up this morning with S.N. Sharma, the CEO of Den Networks, and he says that he expects revenues to grow about 6 to 7% sequentially going forward.
We have registered a EBITDA of 81 crore. Last quarter it was 82 crores. Vis-a-vis previous year, it's a growth of 54%. We clocked 53 crores EBITDA in the same quarter previous year. Going forward, I am sure that quarter on quarter our revenues will keep on increasing in the range of 6 to 7%. As of now, we operate in the universe of 13 million subscribers, and we have already digitalized 11.5 million subscribers out of these 13 million subscribers that we have access to. And in coming quarter, on monthly basis, we will be adding around 80,000 subscribers to our digital kitty.
Okay, yeah, then there's a quick recap of all the buzzing stocks that we covered. We have TCS, United Spirits, Agrotech, Hudson Agro, Jai Bharat Maruti, MCX, Den Networks, and a whole host of banking stocks like SBI as well as PNB. Then from the mid-cap space, it's good to see the kind of recovery that we're seeing on the mid-cap index. Varun Beverages, there we are seeing volumes pick up. The stock is well spiking up. And Bombay Dyeing, that's the other one that was trading in the red just a short while back. So the intraday charts for both these two stocks should come up for you on the screen. JP Associates as well moving higher as we speak. Keep an eye out there. While Nestle has suddenly slipped lower. I think it's moved to the low point of the day. So Nestle as well should come up for you on the screen. But let's get chatting about the building product sector. Remember, it had a very good 2017. Stocks like Century Ply, we had Serra Sanitary, all of them saw gains of around 80 to 90% in just 1 year. There were plenty of tailwinds as well that could continue coming in from the building product sector, including RERA, GST, as well as government's affordable housing push. Now, Mr. Keshav Bajanka, the Executive Director of Century Ply Boards, joins us. Hi, Mr. Bajanka. Thanks so much, sir, for joining in today. Let's start off with a very basic question. Are you witnessing an increased demand owing to the continued tailwinds for the sector?
You see, GST, the true effect of GST will come in once the e-way bill is introduced throughout the country. Having said that, during the second half of last quarter, we got the benefit of the GST rate being reduced from 28% to 18%. So that was a shot in the arm to the entire organized sector within the plywood industry, because effectively our prices fell by 10%, whereas those of the unorganized sector remained constant because they weren't paying taxes to begin with. So towards the second half of last quarter, we saw an increase in demand, and I think that trend has continued into this quarter. But I believe the true effects of GST will show once the e-way bill is introduced completely throughout the country.
Okay. Keshav, on that e-way bill, the jury's still out, right? So what's your assessment? Will it make it difficult for you, companies like you to operate?
I think there'll be an adjustment period as far as the e-way bill is concerned, because it's a new way of operation. However, having said that, for the organized sector, it is going to benefit substantially because it will increase compliance. You see, earlier the unorganized sector players could evade taxes by issuing goods from one state, transferring them to another state, and then removing the documentation altogether. Now that becomes impossible because an electronic trail is created and there's a time limit on the duration of the transfer of goods. So I think for the organized sector, yes, there are going to be initial hassles, but it will be tremendously beneficial going forward.
Well, Mr. Bajanka, you had a target of around 20% for FY18. For FY19, I think it was closer on 25%. Now, in the first half of this year, you've done only around 5%. You think you'll manage at 20% on a full year basis?
You see, during the second half of this year, I believe we will be growing at 20%. I'm talking about Q3 and Q4 put together. As such, I feel next year 25% is a fair estimate. However, the overall growth for this year could be slightly lower than 20% because of the low first and second quarter, because of the low first half of the year. But during the second half of the year, we will definitely grow at 20% plus. And next year, I believe we will be growing at 25% plus.
Okay, so with all the tailwinds that you have, as well as the new capacity which has come on board, when do you think you'll be able to generate enough cash flow to repay the 700 odd crores debt that you have?
In terms of long-term debt, I don't believe we have much on our books. I think we would have closer to 300 crores. In terms of debt repayment, our cash flows are pretty good. And as of now, we don't have any frozen capex plans or any major frozen capex plans because our MDF plant has already become operational. Our laminate plant should get operational within this quarter. So I think in the next few quarters, we should be able to repay the debt that we do have on the books.
Well, Mr. Bajanka, one of the big drivers for your company has been the MDF plant. Now, you said that it will give around 150 crores of revenue in FY18. I think I remember you telling us as well you're expecting around 400 crores in FY19. Are you sticking to those targets for MDF plant?
For FY18, I think we'll slightly revise that number. I think we'll be closer to 130 or 140 crores. But going forward, yes, I believe the guidance for next year was 350 crores plus. And I think we will be achieving those numbers. The margins in MDF are healthy, as we had discussed earlier. And I think that trend is likely to continue.
Okay, so good to hear that. Finally, what kind of growth do you foresee in your lower-end plywood brand as well as the premium brand, and what will it mean for your plywood margins?
You see, in terms of margins, both Scenic and Century give us similar margins because the cost of raw materials is different in both categories of material. Having said that, yes, Scenic should see a faster growth, but our PF category or the higher end category also, I believe that is going to grow at a good healthy pace of 15% plus, whereas the lower category or the Scenic category should grow at 20-25%.
All right, Keshav, we'll leave it at that for now. Thanks very much for joining in. So that's the word coming in from Century Ply. Some of the key points, of course, the MDF business, they're very, very bullish on, and the company hopes to repay all the entire debt that they have over the next few quarters.